Mortgage rates surged at the end of June, floating around 6 to 7%. The Fed hit pause on rate hikes, but buyers and sellers facing an interesting summer real estate market. And that's why we have local realtor Corey Burr back with us to share some insights into the market. Good to see you, Corey. Thanks for coming in again. We say a pause, but now we're hearing we might see more interest rate hikes before the end of the year. What's that going to do to the markets?
Well, that's our fear. Right now, there's been acclimation with the new interest rates around 6 to 7%. But if they take another leg higher, it's going to be very problematic for our market.
So who's buying, who's selling, what price points are moving right now and which ones are not?
Well, the story this year is how resilient the market has been in the face of these higher interest rates. A new mortgage, 30-year mortgage, is 32% higher than it was this time last year, yet there's still very strong demand for properties out there.
It's higher than it was this time last year. It's way higher than it was a couple of years ago when people were, jumping in at 3% or so. I mean, those days are they gone forever, or at least gone for a very long time?
I think they're gone for a very long time. Those rates were low to get us through the pandemic. And right now, this is about historically where rates are. And I think that if rates are going to go lower, we're going to be staring a recession in the face, or we'll be in a recession. And that's going to affect people's psyche to want to buy something. So don't expect, any great deals on interest rates for the foreseeable future.
We might see that rate drop just a little bit in the near future. If we're looking at 6 to 7% right now, is there a magic number when more people that maybe are sitting on the sidelines right now might jump back in?
Well, the key thing is loosening up inventory. So a lot of people are locked into these interest rates that are 3 to 4%.
They're not getting rid of that.
No. But if the rates come down to 5 or 6%, they're going to be willing to trade their houses for other ones because the cost of the money isn't going to be that much more expensive. But even that, I think it's going to be a prolonged period of time before we get to that stretch. And I remember the 1990s very well, where prices went sideways for almost 10 years. And I think we're going to be in that kind of situation moving forward.
So really, we have to adjust our mindset to, instead of saying, well, I wish I could have gotten in at 3%. Now you're saying 6% is kind of where we're going to be for a while, right?
I think that's what people's expectations should be, yes.
Yeah. It's interesting. I was talking to another realtor when we were in Annapolis on Friday for the show, and they were just running through a whole bunch of properties. But the ones that were, and I know Annapolis is not D.C., but for there, if you're looking at higher end properties, like maybe $2 million and up, they were like, these have been on the market for 30 days, for 45 days. That was unheard of for any property a couple of years ago. Are you seeing the same thing here?
Yes. So we need to remember that the last 3 years was a generational move, excuse me, in prices and activity. When the market starts to slow down, we see at the high end, the properties stay on the market longer. And everyone scratches their head like, how can this be happening? But when the cost of money has doubled, it's very easy to see that these big properties can sit on the market longer.
But is the people that have those big money properties, are they still listing them? Are they still trying to sell, or are they going to wait again to see if it's something that maybe they can move quicker at some point?
It depends on the person. The best strategy is to keep the property on the market, because you never know when the right buyer is going to come down the road. But and it's very hard to time real estate like the stock market.
Sure.
One might.
For the more mid-priced properties right now, if somebody is, and we get people moving into D.C. all the time, right? And you need to get something. Are we seeing cash buys still? Are we seeing bidding wars still? Or is it, if you're going to buy, you have a chance to just think about something for a day? Before you couldn't, right? You had to jump in immediately. What are we seeing now?
All buyers need to be prepared that they're going to be in stiff competition for any new listing. But after 2 weeks, that gloss on that new listing dulls. And the odds of being able to negotiate a better deal for a buyer greatly increase in the second, third, fourth, fifth week. So I think we're going to see many more of those opportunities for buyers as we get through the rest of 23.
All right, so take a look at those listings, and if it's been sitting there for a little bit, then maybe you can work a little magic with it.
Exactly.
All right, Corey, thanks. It's always good to talk to you. Appreciate you joining us this morning.